Bloomberg Audio Studios. Podcasts, radio, news.
A single best day. It was an odd day. It started at 7 p.m. last night when the Japanese market opened. Yes, I'm on my iPhone with a Bloomberg app. It's phenomenal. All the information you need, equities, bonds, currencies, commodities. And by midnight, we were really off to the races with some continued angst in the global market, generally witnessed in bonds with yield up, price down, the classic inverse relationship. Things improved. 2 a.m., 3 a.m., but we came in here with the backdrop of the legislation in Washington. There was a real diciness to it. As I tape this, Bitcoin over 107,000, gold up $20 says all. I have no idea where we'll be this afternoon, which is what keeps us going. One of the great moments today, Marta Norton joined us from Empower. Full disclosure, Empower, the people that handle my retirement plan, everybody else at Bloomberg, the administration and all that. They're out of Winnipeg, Canada. And Marta Norton is also out of Morningstar. And she said something brilliant that should be bronzed across all of our minds on investment. Hear Marta Norton on philosophy.
My kind of grounding at Morningstar, one of the biggest takeaways that I had, and to your point, I grew up as an investor at Morningstar. It was the importance of an investment philosophy, having a point of view, a framework that would help you distill what's happening in the markets and make determinations going forward. If you look at, kind of the most successful strategies out there, they're not successful in every environment, but they have a touchstone that they return to. And I think those touchstones are really important to navigating choppy markets.
I, of course, selected that for single best idea because I incredibly agree with it. If you don't have a philosophy, either find one or find somebody who has a philosophy you think you have, but you don't have it. If you do have a philosophy, stick with it and test it in your mind each and every day, which is what you do within the focus on the media and however you get your information on equities, bonds, currencies, commodities. On equities, Brian Belski joined us. Brian Belski of BMO Capital Markets, the Bank of Montreal. Brian Belski on the oddities of the moment. He thinks we've come too far too quick, but nevertheless, he remains a bull. Let's listen.
Stocks can go up when yields go up. The average 10-year treasury the last 75 years is 5%. 0% is not normal. What's happened in the Fed since August of 2007 is not normal. And I think we're kind of returning to normalcy. On the bond side of things, even though we're primarily equity people, we believe the majority of returns, total returns of bonds the next 10 years is going to be about yield, not price performance. Remember, the last 40 years, we've seen massive outperformance of bonds for the most part, and we've had great price performance. So I think, Tom, that we're entering into this period where more even returns for stocks, high single digit, low double digit, same thing with earnings growth, where a yield environment that can kind of hover in this 350 to 450 range predominantly.
And again, a conversation from another time and place. If yield moves higher and fixed income goes down in price, can equities cut either way? Can equities go down within the gloom? Or can equities prosper within Belski's normal environment? He's with BMO Capital Markets. On your commute across the nation, special thanks. Google out with their roadshow yesterday. I'll be honest, I haven't even reviewed it. But the answer is Android Auto, building each and every day. Apple CarPlay as well. And on YouTube, subscribe to Bloomberg Podcast. Easy to go to YouTube. Then you go to Bloomberg Podcast. That's the easiest way to get there. And thank you for your support there. Out on YouTube podcasts, this is Single Best Idea.